Good evening, everyone, and it gives me immense pleasure to welcome all of you to the second edition of the world's largest fintech fest, the Global Fintech Fest, organized by Payments Council of India and Fintech Convergence Council, the two councils of Internet and Mobile Association of India, along with National Payments Corporation of India. This fest is presented by the Ministry of Electronics and Information Technology, Government of India, and supported by Niti Aayog, Startup India, and Invest. I would also like to take this opportunity to quickly thank our other partners, our sessions partners, Australian Trade and Investment Commission, WorldPay from FIS, Ibautech Corporation, our CX partner Zendesk, our cloud communication partner Root Mobile, our insights partner CrediWatch, our conversational messaging partner GovShop, and our credit insights partner TransUnion Civil. With that, the second session of the summit is basically revolving around the theme FinTech Empowering a Global Digital Economy, which is providing an in-depth understanding of the latest business, policy, investment, and technology developments within the FinTech landscape. We are here today to discuss a very interesting topic on digital experiences, challenges in building scalable models. And we are glad to have our esteemed lineup of speakers. I would like to welcome our esteemed panelists, our moderator, Ms. Shilpa Mankar Aluwalia, Partner and Head FinTech Practice, Shardul Amarchand Mangaldas and Co. We welcome you, along with our other esteemed panelists, Mr. Ala Daud, Interim CEO, Cashew, Mr. Khalil Alami, Chief Executive Officer, Teller, Mr. Donovan Drew, President, Asia Pacific, UK Share Technologies, and Mr. Pranav Bhartwal, General Manager, MatchMove. Thank you so much again for joining in today. And I would take questions from time to time on the chat box on the right-hand side, and we would take it in the last 10 minutes. Over to you, Shilpa.
Thank you, Garima. And again, let me extend a very warm welcome to all of you here today for our session this afternoon. You know, there's been tremendous growth in fintech innovation and products, not just in India, but globally. And we've seen platforms and businesses move from their journey of being a startup all the way to an IPO. And one of the key questions really is, how does one build a scalable model when you're in the world of fintech? And Garima has introduced the panel. We have a fantastic panel with us today with decades of experience in fintech and payment solutions that cuts across several jurisdictions. So very excited to hear from all of you today, and you know, very warm welcome to all the other panelists. Garima has done an introduction, so I'm not going to redo that. Let's jump in to the discussion. When we're looking at building a fintech business, one of the key questions is how to scale up. And I think the three key things that everyone talks about is how to build the right team, how to develop the right product, and how to target the right market. So let's hear from our panel on each of these three pillars of starting a business. Let me start with you, Ala. Maybe you can talk to us about how did you think about building the right product and innovating in sort of fintech when you launched when you got involved in your payment product.
Yeah, sure. So our experience is a little bit maybe different from other companies because we've been around since 2002. It was actually started as a small product under a company called Maktub, which was pioneering in a lot of different internet-based businesses, from content to communication. And then fintech and digital payments. And actually, Cashew predates the phrase fintech. We've been around since before even the coin fintech was the phrase fintech was coined. So it's just like step by step. The idea of our advice for any startup who are thinking into going into fintech. Fintech is one of the most exciting industries to be around, but one of the hardest, I would say, because it has a lot of different moving, parts and pieces that you have to be aware of, and you have to manage or juggle all of these challenges together, which is targeting the first thing is just identify what is the pain point of the user that you want to target. What is the differentiating factor that you have, even if it's in a niche, let's say, need. And with the fintech scene right now, it's becoming more and more apparent and important to just let's say pick a niche of a problem and attack it with full force. For us at Cashew, it was the idea that people in the MENA region are unbanked, like around 86 to 87% of the population within the MENA region. They are unbanked, which means they also have limited, very, very limited access to credit cards. And that creates a problem with the digital age. So when Cashew started, it started just like a small, let's say, product resolving this issue of allowing users to transact on specific merchants. But after that, over time, we've seen the need for more than just transacting on merchants. So we matured over time, and when we went independent in 2016, we were under Souq, which was sold to Amazon. We went independent in 2016, and we pivoted into the whole e-wallet model and solution, where we provide users with not just the ability to transact on merchants, but also to issue prepaid Master or Visa cards, pay their bills, and a whole, let's say, a financial solution away from banks. We have, at any, and also if any of the aspiring entrepreneurs want to get into fintech, they have to get ready to have like a love-hate relationship with the banks. The banks are interested in partnering with the fintech, but they don't want the fintechs to, let's say, dominate the scene. That does not mean that we don't have great relationships with a lot of the banks, but this is just like a business practice where everybody wants to have a piece of this cake, and it becomes very apparent in the MENA region that the need for such e-wallets is very, very, very important, because people are thirsty for such solution.
And it's interesting you mentioned that, Ala, because that's been a real sort of challenge in India as well. And now we've seen a lot of collaborative partnership models evolve between banks and fintech platforms. But that's an interesting sort of piece, I think, that everyone has to deal with. Khalid, I'm going to ask you to come in. I know you use sort of a 100% proprietary technology stack. So how do you think about building a differentiated technology stack when you're getting into digital financial solutions?
Great, thank you, Shilpa, and everyone here. So the reason why we've built a proprietary technology is we wanted the power of customization. So we have to look at the source of why this is happening, and why do we need to build it ourselves. To be honest with you, today it's all about customer experience and user experience. So we have in our market, at least, and I think it's a trend now around the world, is that the customer or the user is a Gen Z or a Gen X, and they have very limited attention span. So when you want to provide a service in the fintech world, you're talking to a sophisticated user that is most of his time is online with an attention span less than 30 seconds. So you want to build something that you can get that attention and deliver your product or your service effortlessly and with no hiccups. So when we looked at what needs to be done, buying an off-the-shelf core and enhancing it was not an option. So we decided to go through the heavy road of building it ourselves, customizing it to our needs, and scaling that up completely from A to Z. And that's where we understand, we have a continuous conversation with our clients to understand their needs and customize on a single client basis. Obviously, that stacking up is takes a lot of effort. That scaling up takes a lot of effort, and talent is scarce. So what we did for talent, at certain points in time, because there is a big need and a big rush from the industry towards skilled developers, we looked at multiple solutions where most of the development happens in-house, but at the same time, we augmented our team with some outsourcing solutions from different countries, a lot from India as well, as it being a leading country in such outsourcing services for development. So we augmented our team into different parts of the world with different models of how we recruit. And this is really how gave us the ability to scale up quite quickly and to have a limitless top in order to innovate.
No, absolutely. I think that's one of the key challenges that sort of anyone looking to get into this space has to think about. Donovan, let me ask you to come in on, on how do you define the right go-to market at UK Technologies? I mean, how have you thought about that journey?
Yeah, so I think with Ukesha, I mean, it's been a very exciting time for us. I think over the last 2 years, we've just expanded. We've taken over Africa, and obviously, as a fintech, we start thinking of global expansion. And my role is looking after the Asia Pacific region and building that out. Given experience, I've been in Asia Pacific before and understanding the nuances within the region, and finding a lot of similarities with regards to South Africa into Africa and based in Singapore out into Asia Pacific. I think what we need to understand here is that you often reuse what you've done before, and certainly in this instance, if we look at Asia Pacific and we look at all the regulations are different in every country. I think that's the first thing to take into consideration. You've got to do your homework around that. Some banking licenses in Asia Pacific in different areas take up to a year to attain, and very difficult. We've certainly taken on the whole fintech role. And if we look back at California, and this analogy has been used before with regards to the gold rush, everyone went to California to go get gold, but then some guys went there and they supplied the picks and the forks. And we've taken that exact motion with regards to what we've created. It's a single API platform that integrates into orchestration of a whole various amount of fintech services, which has really differentiated us at the same time, because I think we've seen a lot of fintechs come out there that are niche players. We've taken the option of being the nuts and bolts, but offering a number of services that we can orchestrate together and taking that whole issues around bin sponsorships in banks and countries away from the guys that want to get to market fast. Because if you look at the fintech arena, it's certainly about speed. It's about getting subscribers, and it's about getting those transactions that are going, and those are key. And what we've done successfully on our platform is have the ability to expand this into any region at a very fast pace, from 4 to 12 weeks, in fact. And because we've got a number of services that are fintech related, it just enables people to get running very fast. So defining this go-to market in a particular region, there's a number of things that need to be taken into consideration. So certainly, I think the first is regulations and understanding that. And then from a financial enablement perspective, understanding the territory that you're dealing with, and their appetite or ability to consume mobile devices and the digital platform, which is very important. And then, I think that the important thing then is building partnerships. Partnerships are key in this industry, and associating yourself. I think we see the Ukesha brand, but it's really an African word that means cash. But a lot of people don't recognize the name, and they don't really understand it. So I think it's important that we associate ourselves with credible organizations out there. So what we've really done is MasterCard and Visa, we've really established ourselves really high on their radar with regards to partnerships. And then we've picked up with SAP and AWS and some of the big brands too, where we've associated ourselves to. And I think that credibility is built by association with the bigger brands. It can take you into these territories so it doesn't matter what name you've got. It's about the association, building credibility, and having the references behind you that supports you into a go-to-market strategy. And then the final point that I'd just like to add is certainly around the people that you choose to drive this, because when you start building a fintech organization, the next thing is you need to raise capital, and people invest in people. So at the end of the day, when you get to that stage of the game where you need to raise capital, you need to make sure you've got some credible people out there that have got some scars. That's important, because I think with scars we learn a lot. And so I think the people that join the organization and are part of the business from a foundation perspective are key, and they've got to have that energy, that vigor to drive and be creative, because this is certainly thinking out of the box game. So a lot of people that come from a corporate organization are unable to feed into this area because they've been tied down to certain rigid parameter. So it's the mindset of the people that you put into the organization that can diversify and think out of the box with that go-to-markets and move things forward. So, yeah, it's exciting times, and I think we're one of the fortunate ones to progress pretty fast in this space. But, yeah, we look forward to see what's next.
No, absolutely. And Jonathan, one of the things you mentioned was, you need to be quick. I mean, the speed of just reacting to things that are happening. So, Pranav, let me bring you into this. I mean, change is constant, and particularly when you're dealing in a digital world, just the speed of change in technology, in products and innovation is so rapid. How do you think about that? How do you sort of keep up with the constantly changing environment in delivering financial solutions?
Yeah. So, if you look at the history of Matchmove, our founder had a gaming company which was very popular across Southeast Asia. And very quickly they realized that most of the users did not have a way to pay for games, right? So that's how, Matchmove came into being. Initially as a pure wallet company that could be given to businesses, who in turn could, give it to their users. And then quickly, as we saw the market opportunity, we realized that, we can, on this platform itself, we can build a modern issuing platform, right? Because most of the traditional issuing platforms, the big organizations, those guys had a very inflexible platform that was not really very useful for fintechs. So we built that platform. That platform obviously started scaling very quickly, and we actually, within the first 2 years of our being, we enabled the largest co-brand relationship in terms of number of users in the world, right? With millions of users, actually operating on that platform. If you look at our solution today, and obviously in India, not just in India, but across Asia Pacific, the whole payment industry is evolving so fast because of regulations, because of, intersection of different type of technologies, which is happening, right? But Matchmove has been on the forefront of it, primarily because, our technology teams, the type of people that we have in the teams, and the fact that we are a globally dispersed organization with development centers in India, in Vietnam, in Singapore, Indonesia. We cover whole of Asia Pacific, and we have a very global mindset in terms of building platform. And we are actually in a position to spot trends which are taking place in various markets, emerging markets across this region, and build products accordingly. But as the users, as the speakers before me were saying, I think early on in an organization, it is very important that the founders and the early team recognize the market gap and create a product market fit very early on before trying to scale, because one of the quickest way of dying fast is basically trying to scale without having achieved that product market fit. We have been lucky in that sense. Whenever we expanded our horizon or our vision for the company, whatever we introduced in the market, we found the product fit pretty early, and therefore scaling wasn't really a challenge. Another thing that I would like to add is having had the experience of entering 7 to 8 markets in the last 2-3 years in an industry like payments, which is highly regulated. I would want to highlight the role that our bank partners play, right? Because for banks it's not very easy, right? Banks don't see a lot of revenue early on, because in each new market, the product takes some time to stabilize and scale, right? They have to do, the fintech partner always wants to do a lot of experimentation, right? To get the product right. Banks have to take, especially the business team that you interact with within the banks, they have to work, a lot to get approvals from all the stakeholders within the bank, because, banks have to be careful. They are the regulated entity, and ultimately, the responsibility for any, mistrials actually fall on them. So they have to work very hard with you. They have to create the business case. They have to get all internal approvals. They have to make sure that all compliance data related issues are adequately handled by the partner. So I would give a lot of credit to all our bank partners, not just in India but also in other geographies, for having supported us and for having done a lot of work along with us to support that growth. Yeah.
And Pranav, one of the things you mentioned, which I think, Donovan also mentioned earlier, is building, even the founders need to have the right vision and build the right team. I mean, I think that's really critical to scaling and sort of powering growth in some sense. So maybe I can ask Khalil and Ala to just jump in and comment on how do you really go about, building the right team, which is really critical to your next phase of growth.
Sure. So from our perspective, being in the fintech, looking for the team to build our platform and our company is not just about developers. Today, there's two parts of this. There's the tech team or the development team, which is you can find a good developer, but not necessarily that would mean that they would be a good developer for you, because we have a specificity in our business in the payments world, where we look for also payment experience, because you want somebody to understand what the business value that we're bringing to the table, so they can actually develop it for you. This is one thing. On the other side, not all of our all of the team is technical. We have some other aspects and departments in the company, and we believe in culture. So the culture is built on a certain level and brand values of Teller, of what we bring to the table as brand values. And this brand value is starts actually with the first employee in the company, at the lower end or at the top end. Regardless of what employee, they should speak that same brand value. They should bring that same brand value to the office, in their interactions with their customers, in the interactions between each other, and that brand value then is portrayed into our product, into our interactions, and so forth. So brand value is very important, and that is all sourced at the culture that we bring into the office, and that culture eats anything for breakfast. So it's super important to have a positive culture that is trickled down with the brand values. We're talking about making sure that we're customer centric. We're talking about boutique services, and that's quite important for us in order to have the right experience for our customer. And I think this is the key here. Culture is key. And and the change that you bring in, if you don't change the culture, nothing will change. So I think that this is where we start as Teller in our brand values.
Sorry, go ahead.
Yeah,
go ahead.
yeah. Sorry for that. May I add just also one thing? I agree. I totally agree with Khalil regarding that. And I want just to add one thing, is that being skilled at your profession or your specific role as a developer, as an engineer, as a marketer, as sales or whatever, is not necessary in any industry, I would say, but especially in the fintech world. The employee or the team, they have to share the values, as Khalil said. They have to believe in the mission. Not necessarily a previous experience in the payment itself when it's outside of the engineering. I would say the engineering, they have to have, or at least the top guys have to have an extensive experience into that, because as Khalil mentioned, it's not just any engineering or writing, or writing code. It has its specific, and detailed framework of work. But the other teams as well, they have to believe in what you are doing and your mission to provide users, in our case in Cashier, to provide users with a cashless lifestyle. We've been there, we've left this firsthand, and we've seen the pains of not being able to transact online, or living in a cash-based society. So I would, also repeat one of the, previous CEOs in a company that I worked with. They said that like an excellent employee has to have just, two things. They have to be smart and get the job done. If they have those two qualities, everything else they can learn. I would add to that just, believing or understanding what you are, what you stand for, and what's your values, and what are your mission and vision. If they understand that or have experienced some of it, even in a way or two, because before Cashew, I worked in the gaming field and in the entertainment, and I've seen firsthand the pain of not being able to easily transact online or pay for your e-commerce needs or gaming or entertainment or what have you.
No, absolutely. And I think, both of you emphasize how important it is to create the right culture. And I couldn't agree more. I think that's a learning for any organization. So I couldn't agree more. Donovan, I'm going to bring you in. Allah sort of at one point mentioned the love-hate relationship that fintechs have with banks, and Pranav spoke of the collaborative models that he's seen, and that sort of they've really benefited from with fintechs partnering with banks. How has it been for you in your journey? How do you view the fintech sort of bank dynamic?
Yeah, well, it's a very important one for us, and certainly in our journey in Africa and as we replicate throughout the world, it's key for our foundation, because as a payment provider, with this orchestration, the bank bins are so important for us to transact on land. So again, it's association. I think that 101 marketing is word of mouth is the most important thing. So if you're picking up big clients out there and big customer brands, which we luckily we did at an early stage of our career, those people will speak for you, and they'll speak credibility when you take it to another country and talk about volumes. So, and cross-border remittance is actually a great one to get involved with, because as one fundamental, it kind of gets you involved from a legislation perspective, from a country perspective, and you need a bin sponsor, to take that money in and out the country. And again, you need to do it right. And you need to have all the compliance and the regulation and people within the organization that manage that. So I think, getting PCI compliant and all those things are fundamental, but ultimately building this foundation with credible clients and having the ability to replicate in different countries. And like I said, it's been challenging because, in Africa, every country is different. When we go into Asia Pacific, every country is different. And we need to understand that and work with local partners. And I think for us, the biggest thing, and with most fintechs, it'll be the relationships with Visa and MasterCard, because those guys, they've got territory managers that understand the territory. You can feed off that, and they will help you with a lot of introductions into the banking arena. And again, the credibility of the bigger clients will kind of open the door and get the conversations going with the potential volumes that you're going to bring. So, yeah.
So it's clearly been a more collaborative model for you as well.
Most definitely. And you can't take it on by yourself. Like I say, there's got to be a few steps completed before you just pitch up at a country and say, I'm a fintech.
Absolutely. Pranav, I'm going to go back to something you mentioned earlier. You spoke of sort of, regulation and the banks being regulated in terms of dealing with data and privacy, security. As you scale up, you just deal with, and the volumes go up, you're dealing with many more customers, much more data, issues of data privacy, security. How do you think about that when you have a very high growth trajectory?
Yeah. So, data security is extremely important for fintechs, because, one breach can actually kill all the credibility around you, right? So you have to give a lot of attention to that. We are lucky in India that RBI has actually taken it upon itself to prescribe guidelines that have to be followed. So there's no scope of ignoring that, right? But even otherwise, even if that wasn't present, which is the case in some of the other markets, we still follow a very consistent and well thought of data storage policy, and we are consistent across the markets, and we have implemented the best in class practice, right? So if in India, Indian regulators say something, we try and implement the same thing across all geographies, which makes it a bit expensive. Also, it deprioritize some of the other business related projects, but it is important for the credibility of of any fintech player, especially if you're in the payments industry, and it has to be given adequate attention. So we've done that, and I'm sure everyone else has done that as well, and that's why we are seeing the benefits that even though there's explosive growth in India in digital payments, we are not really hearing about any frauds happening or any big data breaches. There are some here and there, but by and large, it's a pretty well controlled growth, and that has only been possible because the bricks, the foundations to deal with that future growth was laid in place by RBI compliances.
You're absolutely right, Pranav. I think it takes just one breach to kind of collapse the consumer trust in a product, which brings me, I think, to regulation. How important that is in some sense, both from the demand side and the supply side. And what we've seen with fintech regulation is very often the product innovation is sort of moves ahead of the regulatory curve. So in some sense, we see a little bit of regulatory catch up. So maybe I'll ask sort of Ala to comment. I can see you nodding. I mean, what has your experience with the regulation been on this aspect?
Yeah. So for us, especially because we've been around since a long time. It used to be that the regulators did not know, or they were falling behind, and the whole fintech digital e-payment was something that is new to them. And in some cases, they told us, this is new to us. I don't have a solid answer for you. Let's work something out. But as we stand today, the regulators are, catching up. But as you mentioned, Shilpa, the fintech are in most cases are one step ahead. And we like what we see right now of more of a collaboration rather than what it used to be, is that this is the way, you have to do it this way, and don't talk to me. Now, especially in the MENA region, it's more of a collaborative and more of a discussion and seeing what the market needs is, and the regulator wants to know how far ahead are you, or how can you help in specific area or something like that. And COVID came and also, let's say, cemented this vision that is not, it's not a luxury. Okay, it's something that is real, and for example, we've seen strides in implementing the eKYC, for example. On top of all of that, we have in the MENA region, we have another challenge, and I think Khalil also faces the same thing with Teller, is that it's a one cohesive market as the MENA region, but you have 22 countries within this MENA region. You have multiple regulators that you have to talk to, and you have to talk to banks. And one of the most let's say challenging things with that is compliance wise. When you talk to partners, they have their compliance, you have your compliance, and as everybody knows that compliance and business go almost always go against each other, and everyone tries to we have a business opportunity, but the compliance, everything for them is problematic, basically, or everything is wrong until you prove me that it's not wrong. So, but it's exciting, and we are seeing big strides and development, and more of a conversation and collaborative, let's say, relationship between fintechs and regulators.
Right. No, that's good to know. Khalil, what has your experience been like in moving from a more unregulated space to one that's getting more regulated? In fact, I'm also going to sort of build in a question that's come in, on the chat from Sohini, and I think her question is, how do you also deal with the costs of compliance? I think her question is specifically on cost allocation for data security, but I think that also lends to a larger question of just costs of regulatory compliance. How have you thought about that?
Yeah. Great question. Yeah, thank you. So, to be honest with you, I've always been a fan of unregulated markets, and I think unregulated markets harbor and create innovation and fast moving consumer products. But we are at a region where, or at a time where the innovation is super fast. That at some level, some entrepreneurs or some companies no longer validate their product. So the market has been overflooded and has been a complete chaos in the last few years. So I flipped in my direction, and now I advocate for a better regulated market, for a regulated market. And the reason behind that is now the actual regulators that we deal with in our region at least have become more collaborative, more than authoritative. And we've seen, not all of them, obviously, but the big bulk of them, we've seen them enter a regulation into the market with multiple steps. First, it's a draft. They open it up to discussion to certain, people or from the industry. Then they take it into consultants, and then they take it back into the fintechs. And they've listened. They've had this collaborative sense, and we've reached a final version that has been adopted, where it was actually a mutual discussion created by the industry, and that is super helpful. This way, actually what's the road that you need to do, what's the pipeline that's coming in, where you need to be aligned. And I believe that this is a new trend by the regulators. We've seen it in Saudi Arabia, we've seen it in the UAE, and some other countries. And I think this is fabulous. It creates on the cost allocation. We've seen two different schools from the regulators. One school that is super rigid and puts very high, let's say, market entry requirements as far as cash allocation and maybe collaterals and capital requirements, and others that are actually on the flip side. They actually, for the same license in a different country, it's much lower. It invites the entrepreneurs, it invites the fintech startups to enter into the market and do something beneficial for the market. So yeah, I don't look at compliance as a cost, because I don't look at compliance from the same framework that maybe Ala or my other colleagues look at it. I have compliance follow business, and I don't have business follow compliance. In a sense, not in a sense that we are non-compliant, but in a sense that we create the business side, we create the business case, the business story, and then we give it to compliance. Here's what we want to do. Tell us how we can do it efficiently. Don't tell me how I cannot do it. Tell me how I can do it. So this is the different framework, and so that's that. And as far as data security as a cost allocation, the question is on the flip side: do we not allocate cost for data security and then pay it later when we have a breach? All it takes is one breach. So we look at it as an investment. We look at our PCI DSS as a big investment. We look at our encryption tools and all that stuff that we do as an investment, because that really protects the consumer first and then the company with our data. So these are my 2 cents on this.
Right. I'm conscious of time. I know we have a couple of minutes before we sort of have to wrap up. So I'm going to open it up for questions. I can see there are a couple in the chat here. So the one question we have that's come in is how to deliver an exceptional investor experience, with data and digital innovation. So looking, I guess, at the investor sort of aspect of things. I don't know if someone on the panel wants to take that up.
Yeah, I think, just from my perspective, I mentioned it earlier. When you're getting into that area of investment, it's important that you've built the team correctly, because when investors talk to you, they need to understand your story, and they're going to buy into the people that are driving it forward. So, somebody establishes a fintech, they have some success, they say, okay, cool, seeding round, A round, whatever they're going for. It's important that you've got the right tenacious, minded people. Think big. Definitely a type of people within the organization that can help you sustain this business into the future. And I think that fundamentally from a culture perspective is one of the most important things. Obviously, from there, you need a great technology stack, something that's going to scale, something that's going to build, something that's born in a SaaS environment, and you've taken regulation into consideration with regards to the various countries, and you're solid. So, I mean, those are just some of the fundamentals that I think are imperative.
Yeah, I think the question was more related to investment as a product. So I think if you look at trading, wealth management, and other such platforms, Zerodha has done so well on basis of innovation itself. But even today, you will see that linked products which are linked to the underlying security, or even crypto in some sense, a payment product related to that, those are some of the innovations that you can probably think of, right? Those are things which have not been explored in the market. We have done some of that outside India, so please do get in touch with us. We can have a good conversation about it.
Good.
How are we doing on time, Garima? I can see Garima sort of looking at the clock. So is it time to wrap up?
Yes, pretty much. If you would like to take one more question from the audience, is there anything or any closing remarks from all of you, then we can do that.
So maybe very quickly, if I'm, in 10 seconds, if each of you can just answer the question of, one message in sort of 3 words for someone looking to sort of scale up, what would your sort of one focus area be for them?
From my side, I would just tell them, if you have an idea, validate it and then go for it. Be super aggressive. Don't let anybody hold you back. And it's okay to fail. Failure just means that you're going to try again, and then you're going to keep trying until that one success that happens. So don't be afraid of failure. Failure is a good story. Just be aggressive and put your mind to it and give it your all. You're not just going to go into the office and spend time talking to people and all of a sudden you're a founder or you have an idea. You have to really work hard, and that work-life balance is quite important. So those are my quick advices.
Yeah, I think just quickly from my side, I think partnerships are fundamentally the most important thing as you take this journey. It's important that you fundamentally, from a partnership of the clients that you get on board, and the partnership that you form with the association of your brand to get it out there. So partnerships are key. Focus on them. Ensure that they're done right.
Yeah, from my side, also my suggestion is that my advice would be, if you have an idea that you really believe in, just go for it, as Karim mentioned, and give it your all, and don't be discouraged if you fail. Be also agile in seeing other opportunities, and don't be rigid. Rigidity is the killer of fintech. Be flexible, be quick, and believe in what you are doing, and give it all, and don't be discouraged. You might fail once, twice. Just get up, dust yourself, and go for it. And surround yourself as much as possible with a team that shares your values and vision.
The only thing I'll add is that if your solution is working for 100 customers, the only reason why you will not be able to scale up is if you don't do the thing that people are saying, but also if you don't try and de-risk the business, right? It's very important to start thinking about taking out all the risks which exist for your business, whether it's in terms of concentration of customers, whether it is concentration of partnerships, banks, for example. You have to pay a lot of attention to that, and at every stage you have to continuously de-risk. And if you do everything else that people said, I think you'll scale very, very fast.
Well, all terrific advice. So thank you.
Thank you to all of you. Some great takeaways that we've got on agility and de-risking and everything else. So thank you very much. Thank you, Shilpa. Thank you, Khalil. Thank you, Ala. Thank you, Pranav. And thank you, Donovan. Thank you to all the panelists for being a part of the session. Thank you to the audience as well, because we've got some really good response and some great questions coming in. For the audience and for the speakers, there's a chance to become a really proud owner of RuPay on the Go, which is basically visiting the NPCI booth on this platform and applying for your complimentary RuPay on the Go device. So you can just drop in and know a little more about that on their booth. Thank you so much again. Thank you to everybody for being a part of the session. We'll be back with yet another exciting session shortly. Thank you.
Thank you all. Thank you,
Ciao, guys.
Shilpa. Thanks.
Bye-bye.
Stay safe.
Bye-bye.
Bye.
Thank you very much. Thank you. Bye bye.